Greetings, everybody. Welcome back into Mining Stock Daily. We're going to continue today with a corporate update from Magna Mining. Magna Mining trades on the Venture Exchange with NICU, and happy to welcome in CEO of the company, Mr. Jason Jessup. Once again, Jason, good day to you. How you been?
I've been great, Trevor. How have you?
Getting by. June's almost done, which is kind of shocking to me.
It has flown by. It's been a busy month for us, too.
It has been a busy month. In fact, that's what we're going to talk about today, Jason. Way to lead into that conversation. You put out new results from Crean Hill, specifically on the 109 Footwall Zone recently. I believe it was last week where this news came out. You're getting really good grade platinum, palladium, gold over long widths here. That's not really surprising, really. I mean, you've seen these good grades and good intervals lately. What I'd like to talk more about, and maybe if you can break it down for the listeners, is really these are near-surface drill results. And you talked about doing more bulk sample exploration work and leading into what bulk sampling would mean for the Crean Hill project. And I'm wondering if you could just bring it down, talk to me like I'm a seventh grader here, Jason, and really why is this important for the project, and what does this mean overall?
Sure. So the 109 Footwall Zone is just a portion of the deposit. There's really the bulk of the resources made up from what we call contact style mineralization, which is sort of the traditional Sudbury ores that have been mined, for the last 120 years, sort of nickel to copper, roughly 1-to-1 ratio. This footwall zone, this 109 zone, is sort of coming off the back of that into the footwall rocks. And it is the 109 is recognized as a low sulfide, high PGM style of mineralization. And it was discovered about 10 years ago, 12 years ago, by Lonmin Canada, and we acquired Lonmin Canada. Now, what we recognized back in January with our hole 13 is that there's some very high grade PGMs. It was actually hole 10 and hole 13 was in April, but high grade PGMs associated with also high nickel copper in portions of the 109. So it's not just low sulfide. There's also in areas, we had assays that were up to 6% nickel plus copper. So some pretty massive sulfide, interesting mineralization associated with PGMs up to over an ounce, over 5 meters and plus in areas. So very good grades. So we decided back in April after we released hole 13 and we were trying to understand this high grade trend that wasn't being represented in the current resources and in the block model, to drill a series of short holes. I think we drilled about 25 holes, very short, 25 to 50 meters in length, to better understand this mineralization and see if we actually interpreted properly where it's coming to surface. Now we have back most of those holes. There's still a few outstanding, but I think we've released up to 22 or 23 now. And from that, we think that we're onto something here. There is this high-grade trend. We've intersected where we expected to intercept it. There's still this low sulfide halo around it. And what we want to do is complete a bulk sample, 10 to 15,000 tons right on surface, to reconcile against our interpreted new internal resource of this area, incorporating all these short holes, and then be able to, if we reconcile as well against our new internal resource, that'll really help us for designing mining at depth and when we may be going underground. So,
and is there a little bit of, is it a little confusing for shareholders to kind of understand? I mean, really, Magna Mining's been known as a nickel project developer, and now you're putting in these really nice high-grade platinum, palladium, gold at surface intercepts here. What does this mean in general for the project going forward as far as mining and processing it?
Yeah, and again, I have to highlight, we've talked a lot about the 109 footwall in recent press releases. Yes. It is only a portion, and I would estimate it's somewhere between 20 to 25% of our overall resource, the 31 million tons that we have. It might be even slightly less than that. So it is a smaller portion, but it is potentially some very high value rock. And
Mm-hmm.
because, we believe now with this drilling, we've shown it comes right to surface. Uh, it could become some very near term potential mineralization we could be trucking and selling to a third party mill here in Sudbury. So that's why we've been focusing on it. We're still, I would say, predominantly a nickel, company here in Sudbury. And again, as we've shown in some of these holes, we can get sort of nickel plus copper up to 6% over decent widths. So when we look at underground mining and long hole stoping in these areas, there could be some very high nickel grades in some of these stopes as well. And of course, we'll take all the precious metals that comes with that. But yeah, we want to make it clear that we're not pivoting, we're not becoming a precious metals company, a PGM company. This is just one of the wonderful parts about mining in Sudbury, especially in these footwalls. You can get a lot of precious metals too.
Well, I'm sure the mining engineer and people there in the company, their brains are starting to click around to see how this kind of fits in the bigger piece of the puzzle. What is the potential here with this footwall zone and this high grade? How does it fit into this puzzle?
Yeah, so there's a lot of potential in the footwall. The 109 is just one of the actually three different areas that have been recognized in the footwall. So there's the 109, this low sulfide high PGM. There's the 101 that we released some spectacular holes back in January where we had 31 meters of 4% nickel. And that's another footwall zone that's very much massive, semi-massive sulfides in a breccia, so sharp-walled veins that can become quite wide in areas. So that's another footwall area. And then we have what we call the 9400 footwall, which is another low sulfide PGM zone. It's small. It's sort of isolated to the very western part of our deposit. But, between these three areas, what we've recognized is there's definitely a lot of potential in the footwall. So really what opens up the opportunity is both at depth. The 109 has only been drilled and defined to about a 400-meter depth. The mine historically mined to approximately 1,400 meters. So a lot of ground opened up, and based on some very limited drilling from Inco when mine was in production, we believe this 109 footwall zone continues at depth. But we got to drill that to prove it up. And the 101 footwall zone has only been really defined to a depth of about 300 meters. So a lot of potential again at depth, and that's some of the drilling we're doing right now, but as well as to continue to follow these structures back into the footwall. So a lot of upside potential still. But again, I think as it stands right now, all the footwall deposits are probably only about 20 or 25%. So the bulk of our resource is still on the contact mineralization, and we'll again continue to expand on those resources as well.
All right. So you're currently you mentioned it, and let's just come back to this. So you are drilling at depth here at both the 101 and the 109 currently.
Yeah, so we've started to, we think really model that these structures that host these footwall deposits and where they trend back further away into the footwall. As I probably haven't mentioned, but on other calls, we talked about really only defining them back 100, 150 meters into the footwall. And our experience in Sudbury, and I say our experience, our team and our working in Sudbury, making discoveries formerly with FNX Mining, we would find these massive sulfide footwall deposits, usually rich in chalcopyrite, sort of 300 to 500 meters back in the footwall. And, they're not continuous with the mineralization on the contact. They're often, in a sort of isolated area where there may be very little above it, very little below it, but maybe for 300-400 meters, you can get these very rich deposits, but often much further than has been explored. So now that we understand where these structures are, we've just started to do some drilling, deep drilling back into the footwall to use as platform holes to do some borehole geophysics, which is kind of the bread and butter of exploration for massive sulfides in Sudbury. And, we're hoping to develop some really good targets down there and continue to explore that deep footwall.
Okay. This is all happening leading up to the PEA, which is at this point, I guess, imminent here, Jason. In fact, probably weeks away. You mentioned that you're expected to release this next month in July. What will be incorporated in this PEA regarding regarding adding more mineralization to that current resource? Is that an option, or is this more literally a technical study, a pinpoint scope and time what a mining project would look like at Crean Hill?
Yeah, this PEA is based upon the resource we announced last November. So shortly after acquiring the project and closing that transaction, we announced a resource that had approximately 16 million tons of open pit resource and about 14.5 million tons of underground. And this PEA is based on that. So none of the drilling we've done since acquiring the project, which is probably up in the range of 8,000 meters now, none of that will be included in it. And we just needed to cut it off at some point and start the process of doing the mine planning and the ventilation and development and all of that. So, we did pause for a couple of weeks on the PEA as we were waiting some of these results and discussing internally whether we should postpone the completion of the PEA to incorporate at least the 109 drilling. It looks like that would cause quite a bit of delay just because of how advanced the PEA is right now. So that will be incorporated into future technical studies, future resource updates, but unfortunately it will not be included in the PEA that will be coming out in July. The PEA will be based on a toll milling scenario. So it'll be for Crean Hill alone, toll milling through one of the third-party mills here in Sudbury. But we are going to include also in Section 24 an alternative milling scenario, which would be processing through a future mill at Shakespeare. The big impact on that will be the reduced processing costs and how that will affect cutoff grades and the amount of resource mined and even possibly the throughput. So that's portion will be in there, but the base case will be a toll milling scenario.
All right, so does that increase the CapEx for Crean Hill if it's added to the Shakespeare project? I guess, how do you separate those two?
It's just going to be treated like toll milling. So it'll be treated as just toll milling at a separate mill. It's just a mill that we happen to also own in the future. It's not built yet. But so we're using the milling cost that we had in the Shakespeare feasibility study from 2022 and basically just, shipping ore there at those milling costs as opposed to the higher toll milling costs, which especially on the open pit portion, can have a dramatic impact or at least some impact. So that's what we want to compare. We are looking at shipping some early mining, some test mining, advanced exploration mining from Crean Hill to a third-party mill, and we're well underway with those discussions to get definitive terms. And our plan is we would be starting that development, which would incorporate a ramp from surface in Q1 of 2024. So that is it's well underway and it's very exciting. We could look at, longer term toll milling if that initial advanced exploration is successful.
Yeah. What are you hearing from the street right now regarding construction and CapEx? I guess a general question, what I'm trying to get to is there capital out there to build a project such as Crean Hill when it's ready to go here in such, it's pretty quick timing, short turnaround here.
Yeah, it's not a huge endeavor. So we're not talking about building a lot of permanent infrastructure. As I was saying earlier, we're doing this bulk sample on surface of the 109. Our plan right now would be to ramp down, and the first level would be the 50-meter level. To come in basically underneath that bulk sample, and then we'd have another level at probably the 75 or 80 meter level. So very little development needed to get into the resource and start test mining it. So we're not looking at big capex at Shakespeare with building the mill, the open pit, the co-disposal tailing area. The estimate in 2022 from our feasibility study was $233 million. What we're looking at doing at Crean Hill to get started would be all ramp mining. And so that could have a very modest capex and potentially be able to bootstrap our way as we ramp down and continue mining, creating revenue that could be reinvested into capital. That being said, it's a tough market out there right now. It's one of the toughest markets I've seen in my career. Um, the one thing that's sort of a bit of a silver lining on this now is that there is interest from different sources for capital. So we're seeing interest from um, parties like Mitsui, who we announced an MOU from, and we're still in discussions with Mitsui as a potential source of capital. We're also in discussions with other strategic groups like Mitsui. So, and then government groups. So, U.S. and Canadian federal government have shown interest in supporting projects like ours. So there is some interesting other sources of capital potentially available, but the capital markets as they are at the moment it's pretty tough, and that's why we're very fortunate to have what we'll believe is a low capex scenario to potentially bring Crean Hill into production and hopefully in the next couple of years.
All right. Jason, you and I are definitely going to be talking here in a couple weeks when this PEA is published. So we'll let you go and just kind of plan on having that discussion once that technical report is published in July. So until then, have a great rest of your summer, and thanks so much for your time.
Absolutely.
All right, that's Jason Jessup, CEO of Magna Mining. They do trade on the Venture Exchange with NICU. We'll be back with more here from Mining Stock Daily. Stay tuned.